what should be the way forward. Now, let's wait for that. On Friday this week is State of the Nation address, and next week on Thursday will be Budget Day. Those are the events coming ahead of us in this month, which will, of course, have two very important public holidays, Martyrs Day and also Heroes Day. Now, from all that, on GMU Extra this morning, we're talking about capital markets, and joining me in studios is Mr. Robert Katabaire. He is a resource person from the Capital Markets Authority. You're very welcome, Mr. Katabaire.
Thank you.
I feel very bad if I pronounce somebody's name badly. Did I pronounce your name right?
No, that's fine.
Katabaire. No, it shouldn't just be fine. It should be good. President Museveni on Monday, when we were voting for the speaker, he was very emphatic on that. And he had people pronounce the name Aleper as Alepa, Aberi as Aba, or whatever that is. So we just need to know how to. But welcome. Let's get into the conversation this morning, and we talk about Capital Markets Authority. Ab initio, what are they?
The capital markets are just another platform where the public can invest. For example, in here we know people like to buy property, land, and build rental units, or go into agriculture, or transport, whatever it is. The capital markets is a different form of investment, and it brings two parties together, savers and a party that would like to borrow money. By saving, a saver can buy a treasury bond. A treasury bond is where Bank of Uganda, on behalf of government, comes to the public to take up money, which can be anywhere between 2 to 20 years. And interest is paid on this. Many times you'll have to wait for maturity for this investment for your principal to be returned. You can also buy a treasury bill. Again, you're lending to government, but on a short-term basis, which is 3 to 12 months. A company can issue a bond, similar to a government bond, but this time it's a private company. And as a saver, I can choose to lend that money to the company. But you can also buy shares in a company, and this company must have chosen to become public. That's now where the capital markets comes in. Here in Uganda, we have about 16
capital markets?
16 companies,
16 companies
listed on the Uganda Securities Exchange.
Exactly.
16 or 17. And any Ugandan or East African or foreigner can buy into these companies if you have a bit of money saved.
That also, you've hinted on what my next question would be of capital markets and USE, the Uganda Securities Exchange. Somebody needs to understand that. And then secondly, who regulates Capital Markets Authority?
The Capital Markets Authority is an autonomous body that is under the Ministry of Finance. I'd compare it to a layman what Bank of Uganda does to banking, providing oversight to all the commercial banks, or what the Insurance Regulatory Authority provides to the players in the insurance industry. What the capital market does is to regulate the market that has investment advisors, stock brokers, the USE as well, which is a platform where members of the public can buy and sell their shares. CIS managers or fund managers that are in the market. All these have to be licensed by the CMA, and that's the role they play, providing regulations in that specific sector.
So what do you do different from USE?
USE is where companies list, where the companies sell their shares to the public. It's a form where members of the public, through brokers, can go to the exchange and buy shares or sell the same shares through brokers. Now, the Capital Markets Authority, in addition to the USE, regulates other players. Now, the brokers who work through the exchange, and the exchange also has to have vetted them to be able to become brokers, provides also oversight to such companies. They are investment advisors, who will guide you on which investments in the capital markets you can make and be able to make a decent return. There are fund managers who are responsible for managing money on behalf of their clients. They could be pension funds, they could be collective investment schemes that the public is investing into. So I would say the CMA is the body that is providing oversight and guidance within that sector. Okay. And the exchange is a component within the sector. In
CMA. You talked about CIS. I think you meant a collective investment scheme.
That's correct.
So what is that again?
As I was saying earlier, when, for example, Uganda, you save money, you can't buy a bond. Company or government, you can buy treasury bills, which are shorter term. You can buy shares within companies that are listed on the Uganda Securities Exchange, but you can also subscribe to a collective investment scheme. Now, a collective investment scheme is a platform that brings together multiple investors who hand their savings to a CIS manager, a collective investment scheme manager, to manage the said funds on their behalf. Now, there could be multiple CIS funds, each with a different risk profile. And you as an investor, with the guidance of an investment advisor, would choose which one fits your investment profile. Now, ideally, a CIS or a collective investment scheme is a platform that brings multiple investors together who will submit their funds to the CIS manager, and the CIS manager will manage these funds on their behalf. There are different funds, and each investor can choose which one best fits their risk profile. Or you could choose to spread out in the different CISs. I'll give you an example. There are about 4 in the country, but there can be more depending on how innovative the CIS manager is, based on the needs of the public.
What are for the CISs or the funds?
Funds under the CIS. See now, the top is the CIS. Below it, you can have multiple funds.
Okay, but you have 4 so far?
Averagely.
Okay, which are these now?
The most commonly invested into fund is an interest-earning collective investment scheme. Usually for conservative investors who are looking to, and by the way, when I say conservative, it doesn't mean
it's not derogative.
Yes.
It's not derogative.
Thank you. It's just that that's the nature of one investor. So what happens is that this particular fund has almost zero risk. Why? Because once the fund manager receives this money for this specific fund, it's invested in bonds, it's invested in treasury bills, and these are the safest platforms you can invest money. Lending to the government is the safest form where you can entrust your funds world over. And they select few financial institutions. Okay? Now, what happens is that your principal is growing, but at a conservative rate. Because that's the nature of who the investor is. And I could tell you the 2 common funds in this market are the money market fund or the umbrella fund. Common characteristics. And they tend to be the biggest.
Money markets?
And the umbrella funds. They tend to be the biggest. Today paying an average of anywhere between 10 to 12% per annum. Okay? Now, that is the direction that the market has shown, to preference for a risk-free CIS fund. The other fund can be a balanced fund, or sometimes may be called a hybrid fund. This particular fund has a section invested in risk-free assets like treasury bonds or government securities, but would invest in the stock market as well, its risk profile is moderate, in the sense that you have one section where return is almost guaranteed. That is the interest earning side of the investments. The side that has invested in the capital markets is where the risk component is. You may buy a very good stock, but there are so many factors in the market that could affect the performance of the stock price. I could buy a bank. The bank is not performing poorly, but because there is an election ongoing, like we had one this year, which will make investors skeptical about coming into the market. So the market may not perform as expected, therefore the share price could take a tumble. But because the CIS manager knows that over a long term, this stock that we have picked will add value to the fund, they continue to hold on to it, or probably even continue to acquire more shares of the same. Now that element will see prices go up and down. If you buy a share, say in the banking sector, as a fund, that is, as a CIS, and the shares go down, it affects everyone who has subscribed to that fund. But the side of the interest earning will caution that loss on the shares. That's why it's called a hybrid fund. The other, maybe the last one, is the equity fund. The equity fund will purely invest in shares. And again, there could be specific shares, maybe banking or energy, or whatever it is, or East African stocks, whatever it is. And because this particular fund may have zero interest earning assets, the change in the prices of the stocks, especially if it is coming downwards, will negatively affect anyone's investment. So the risk profile here is high. So anyone buying into this needs to know. So it is preferable for individuals that are looking to be long-term investors, whereas the hybrid may look to medium-term, maybe 3 to 5 years, whereas the interest-earning funds, the balance fund and the umbrella fund, may be looking for short-term, maybe up to 1 year or somewhere there.
Why would a listener decide to invest in CISs, and how would you advise them? Which of the four would they go for? Because you just explained to us the money market, the umbrella, the equity, and the balanced, and of course all these. But why do you think any listener now would actually get into this kind of investment?
Let me start by saying that because we all have different risk profiles, how I choose to invest may not be the same way as Jagenda chooses to invest.
True.
So at the end of the day, that's not a decision I can make on your behalf.
Okay.
Many of the investment houses around have what they call a risk assessment questionnaire. This risk assessment questionnaire would provide guidance on determining what your risk profile is. Then they would advise you accordingly, whether to buy a money market fund or umbrella, equity, or even a balanced fund. So it's not a decision that I will say, go for this. No, we'd have to sit down, discuss, see what your investment objectives are. Are you looking for, say, to put up a project 2 to 3 years? Where do you think the money can be? It's a varying reason. Now, we could say, why would someone invest in CIS schemes? For starters, as an investor, it is good to diversify your portfolio. If you're invested in property, you're a property investor, probably you speculate on property, buy and resell, or you develop, build units and collect rental income. Some of these CISs, like the interest earning CISs, can be an aid to your business. For example, you're collecting rent, put it in some of these until it accumulates for you to start another project. That's one example. To buy into these CISs that are bought into a number of shares, you could be a part owner in Stanbic, the biggest bank in the country at the moment. You could be a part owner in Umeme, the sole or maybe 99% distributor of the power in the country as well, and many other companies that are here. So you get to invest in a market outside the conventional ones that would normally do, say, agriculture or transport or property, name it. Yeah.
Do Ugandans understand this business? When you talk about, especially now, when you talk about capital markets, when you talk about stock exchange, when you talk about issues that concern government papers, bills, bonds, and stuff like that, do you think Ugandans appreciate these things just like it is with insurance? Because when you talk about insurance, what Ugandans know is they only know third party, which is mandatory. That somebody buys a car and the next thing is they have to go to an outlet somewhere, then get that sticker, and to them that is insurance, period. When you talk about all the niceties in insurance, that they don't seem to be communicating to anybody. When it comes to this particular investment, because yes, there are people who have money. I actually even need to know how much money somebody needs to invest in a CIS's here, when it comes to capital markets here. I just need to know how much money somebody has. Because if a Ugandan has 50, 100, 200 million shillings, they will think about buying land, build rentals, you know these things. Some will even actually say, let me import cars. Like you said, speculating on those, that if I bought in cars, if I have 100 million shillings and bring in 3 cars, then I'll be able to trade with them. How much money is needed to get into this? And do you think Ugandans do appreciate that a listener now who has 100, 200, 300 million shillings can actually think about investing with CICs?
Minimum investment is 100,000. What you can start with.
100,000?
Yes. Yes, sir.
Just that, okay.
100,000. So meaning that any person that is earning should be able to afford 100,000. In terms of Ugandans appreciating these products, I think there is interest picking up.
Okay.
Because there's been a level of growth that we've seen over the years. CISs, I think the first farm came around 2004. It had to exit the market. Then I think the current players, one started in 2013. Now, 2013, the CIS market, I believe today has over 400 billion in invested funds. So between 2013, where it was 0, and 2021, where we are over 400 billion, I would say the interest is picking up. It's just that there are other competing investments which we have to show investors as a market that, yes, you're doing this, but you can as well do this. So I can say, yes, the market is picking interests, as even the players in the insurance industry will tell you there's growth. Yeah.
Let me know if somebody is saving at with capital markets or CISs, what do they get? Because ideally, somebody will want to know, I am putting in 1 million shillings because minimum is just 100,000. So somebody is coming with 100,000 10 times, and that's 1 million shillings, and says, here is my million. Then what happens? They're buying bonds, you said bonds or treasury bills, and that's how much they're offering. Then what do they get? Because somebody would want to know, how much what am I getting, first of all, that I have actually paid so much, and this is what I'm returning with. Then secondly, this is actually how I follow it up to know where do my dividends go, where do my shares go, where do my profits go, where do my earnings go, or something like that.
When you subscribe to a CIS, you don't own the treasury bills or bonds or shares directly. You subscribe to the fund which owns the shares.
Okay.
Now, for interest earning funds, you're paid an annual rate. For example, it could be averagely today, I think it's somewhere around 11% in the market per annum.
Per annum.
Yeah. So meaning that if you contributed, let's say, 1 million shillings today, over the next 12 months, assuming the rate doesn't change, you'll have earned about 110,000. But then again, many CISs have an effect of compounding interest. What that means is that you're paid interest that would have accrued to you for a particular month. Meaning 1 million could earn you about, say, 9,000 to 10,000 shillings for 1 month. that becomes part of the principal in month 2. And the trend will continue for 12 months. Now, what you get from your original principal plus the interest that has been earning over the period could take you to 12%. And 12% is called the annual effective yield or annual effective return, which is a result of compounding interest or earning interest from interest. So interest earning funds, you're paid an interest. I would compare it, say, to a savings account where you put money in a bank somewhere and the bank pays you interest on that savings account, or a fixed deposit in a commercial bank where you're giving your money to a bank, say, for 3 months, 6 or 12. You would negotiate a rate of return with your bank, and then upon that, your principal is returned at the end of the period plus interest. Yeah.
What are the downsides of a collective investment scheme?
Maybe we need to talk about the other good sides. I think there might be others that, before we go to the bad ones,
the bad ones,
that the viewers would like to know about. We've mentioned the minimum investment of 100,000.
100,000.
And ideally, someone investing 100,000 needs to do it frequently. Some investment houses will say, okay, you can top up with 50. So you start with 100, have a top up of 50,000 every other time you feel you have an excess. 2, these CISs allow you access to the money that you have invested without notice, whether you invested 100,000 or you invested 1 billion shillings. Why? Because interest is accrued on a daily basis.
On a daily basis?
Yes. So it means that even if you choose to take your money after 15 days, the 15 will still have earned. So that's the element of liquidity that the CISs allow in this case. 3, the effect of compounding. Interest earned during the month or accrued during the month becomes part of the principal in the following month. So if today is 11, by the time you're done with 6 months, you're not earning 11 anymore because interest has been earning interest as well. Then CISs are currently also free from taxation. I think that element should is one area that someone would think, okay, over other available investments, I think I can put my funds in something that is currently exempt from tax. Then, of course, CISs are professional managers with years of experience in managing these things. You would think they are more knowledgeable than an ordinary layman in terms of investing in capital markets. So that gives you a disadvantage. And for me, that may be the disadvantage on the other side. Some investors want a bit of control in where the money is going. The CIS does not give you, as an investor, that control. Yeah.
So where does somebody go if they want to do the investment? Now somebody has had it and they now want to invest. Where do they go? Because you talk about CISs, you talk about Capital Markets Authority, you talk about yes. Where does somebody go?
The first point is check for the players in the CIS market space from the website of the Capital Markets Authority. These are ICEA, Asset Management, UAP Old Mutual, Sanlam Investment, Britam Asset Managers, and Zeno Investments. Yeah.
Okay, so you can get out to any of these others. Did you talk about the downsides?
The downside I mentioned.
Just one.
Yes, I think it's majorly one. And because the CIS manager has control over the running of the fund, some investors find that as unattractive because they have no control where the funds can be invested. So the investment manager in this case will simply tell you the portfolio is spread out this way. So you make a decision whether to continue subscribing or to get out. If you feel that certain assets that the fund manager has bought are too risky for you, you make a decision not to be a part, but you can't influence the decision making.
Who are you targeting for this particular investment as CMA?
The entire public. We know that there are small earners. That's why we've put the lowest, or we've advised the players in the market to have the lowest investment as 100,000, but anyone can invest as high as possible. So it's another way of investing. If someone is choosing to start, say, a salon with some savings, you could choose to put the money here. And you know, some of the investments in the capital markets do not require a lot of supervision compared to if you have a salon or a washing bay or a restaurant, name it.
Okay. Looking at capital, the collective investment schemes, as you just talked about them, and you know, when you talk about savings to Ugandans, they really want to know. Now, is it a bank situation of sorts? Is it, when do they share their dividends? When do they share their, I think somebody just, you said even after 15 days you can come and claim. Is that so? Because when people get into insurance, for example, and the houses that you talked about, I know that many of these actually do insurance, so they have insurance. One of the things that people do not want about insurance is that when you get a policy at insurance or with insurance or an insurance policy, then there is a period of time that you need to hang on there and say you have to possibly keep paying money up this time, then maybe from here we can only think about you after so many months. And that's a challenge with investments. So with this, if somebody puts in their money and they say, well, I'm investing 100,000 or 200 or 1 million shillings, and I want to check on these people after a month, can they do that?
Like I mentioned earlier, these funds in the market today are open. What you may call open funds means that you can take your money at any point you want. Of course, in other countries you find a closed fund, which means you commit to a period of, say, 3, 5, 10 years, depending on what the manager is proposing. But the funds in this market are open. Should you have a change of mind about your investment along the way, your money can be paid back to you within maybe 1 to 4 days, depending on each investment house. Yeah. So funds are accessible. Updates are given to clients on a regular basis, at least monthly, on where the investment is sitting.
Do you look at it as another way that's helping on employment in a way? Boosting the economy, of course, is one thing, but of course, what we're grappling with is lately is youth unemployment, and somebody wants to know whether that actually can help solve that problem. Can somebody just say, well, I am not employed, I don't work with UBC, I don't work with CMA, but I have some money on me. If I just got my 500,000 shillings, deposited it with any of these CISs, then I am sure somehow that that will be in my way of living or so. Living,
me as the person saving, or the money that I'm lending out or investing, helping someone else?
No, you, of course. You have a donation, you have a grant of 500,000 shillings, but you don't have a job. You don't have 500,000 shillings every month. But you have a donation of maybe 1 million or 2 million shillings or something like that.
I believe it's also a platform that someone in that position can put money. I think they can. The challenge with such an individual is that if there is no income, chances are they are most likely going to come for these funds. So if they are okay putting it there, I think there's nothing wrong. It may not earn a lot of interest, say 500,000. Yeah.
Okay, well, the producer is asking for a short break, which we'll take very shortly, then return after this break and continue with the discussion in studios. My guest is Mr. Katabaire.
Katabaire Robert.
Katabaire Robert. Now, again, running to Katabaire of sports. But Katabaire Robert is a resource person from the Capital Markets Authority, and this is what we're discussing this morning. We'll take a break and return.
Live from UBC Studios in Kampala, this is Good Morning Uganda Extra.
Experience 100% 4G speeds across Uganda with the Airtel 4G Pocket Wi-Fi available at 123,000 shillings only. It comes with 15 GB free for 1 month. Visit the nearest Airtel shop, device selling shop, or Airtel online shop. www.airtel.co.ug/broadband-discover Airtel, the smartphone network.
Live from UBC Studios in Kampala, this is Good Morning Uganda Extra.
Well, thank you so much and welcome back from that short break. We continue the discussion on the Good Morning Uganda Extra. My name is Jagenda Semakola Zikusoka and Mr. Robert Katawaire from the Capital Markets Authority this morning. And we talk about the Capital Markets Authority and, of course, protecting investors in financial products, and is now talking about you call them CIs, the collective investment schemes that Ugandans need to get to. How much faith do Ugandans have in these things? And look at CISs vis-a-vis SACCOs. Of course, I know that these are different levels, but Ugandans are so much into SACCOs in a way to just secure themselves and secure their funds. But I'm also looking at the other bit of it, the faith that Ugandans have. Why Ugandans take their monies in the banks is because they know that if my money is with the bank, then I can go to the bank, I can demand the bank. Even when the bank is robbed, they've not taken my money, the bank will have to give me back my money. How much trust and faith do people have in these CISs, for example?
Being a relatively new industry, I think capital markets was set up in 98. Collective investment schemes, say you could say at 2004, when they were set up in the market. There is still some skepticism, of course, like any new product will be. And then you spoke of banking. Banks have been around, I think, since the 1900-somethings, at least here. So naturally, there's a tendency to have more confidence with the banks compared to, say, CIS managers or players in the capital markets. But like I mentioned earlier, the growth is there. The players are convincing the market that this is also another alternative. The money is safe, especially ensuring that all of them are regulated and supervised by the Capital Markets Authority. So by investing your funds in that segment, you're sure that I'm putting it in a regulated industry. I have where to run. And many of these CISs are working with commercial banks. They're banks that are licensed as custodians. A custodian is playing a role of safekeeping of assets that a CIS manager will have purchased for the different funds they are running. So in other words, the custodial bank is keeping track on where the investment manager or the CIS manager is putting their funds. And the other thing that the viewers or the public needs to know is that the assets of the investment funds are detached from the assets of the company, meaning that these two are separate entities. Meaning that if the CIS manager was to stop operations today, these assets, because they're not on the books of the investment manager, can be transferred to another CIS manager. And the transition would take a period of not more than 3 months. Yes. So because of that, the funds are safe. Of course, for us, the risk that we usually see in that area is maybe lending money to a financial institution and it shuts down. The process of collecting that money could take a while, or buying into shares, and that company also breaks down. But internally, we have procedures and measures that try to mitigate all these things. We don't spread ourselves too large in any one particular institution. Yeah.
Government keeps borrowing money here and there from different organizations to to invest and to give services to the people. And somebody would imagine and say, well, when we read in the paper, it has actually increased to this. Uganda's public debt has actually increased. Those debts are increasing every other time that you look in the papers and say, this is our debt, this is our debt, this is our debt, this is our debt. And buying those government papers is actually your government is borrowing from you. And would people really feel secure to lend money to a government whose debt is increasing every other time?
From what I'm reading, the reports I've read about the debt that we have, I think it's not yet reached worrying levels in the sense that the government will default on what it has borrowed from the public. So again, as I did mention, lending to the government is the safest platform you can put your money. As an individual, you can do it by opening up a securities account through your commercial bank. Yeah, so we continue to lend to the state because we feel that it's still at the level whereby it's not worrying. And it's still a safe platform to lend.
Political patronage in CICs?
I'm not sure what you mean by that.
Political patronage, political influence now. You know, so somebody would want to think there is corruption in the country, and there are influences over so and so and this and that and that. Is this thing free of all that kind of political interference from your member of parliament or your minister or anybody?
We do not stop anyone from investing their funds. We know there is the Anti-Money Laundering Act that is already taking care of that, and of course we don't take cash, or institutions in this market do not receive cash. Okay. So whoever is investing with us can either do a wire transfer or do a cash deposit within the bank. But of course internally we also have our guidelines towards anti-money laundering and things like that. So definitely there are steps that will be taken to ensure that some of that money does not come into the market.
Okay. Now, who are licensed and did you talk about them? I think you talked about Britain. You talked about those. Okay. Yes, I think you talked about those. Yeah. And well, because the time is running out, could you please just share with us your contacts to the viewers and how people can actually access you, come to you, follow up, and know more of what you've possibly not said here? Okay.
My number is 752 69 77 77.
So that's your personal number?
Yes.
How about finding you at maybe Capital Markets Authority or something like that?
Yeah, it's fine. It's okay.
How do they get there? Where is
Capital Markets is at Jubilee Insurance Center, 8th floor.
Jubilee Insurance Center. Here?
Parliamentary Avenue.
Okay. And that's where they can find you?
Yeah.
Final word to the viewers?
Final word, I would say encourage the viewers to look at this as an option for investment, because just like banking helps you aid your whatever business you're in, investing in the capital markets can also add a bit of value on your business. For small savers, make it regular. For individuals with big cash, I think it's also a platform that can earn a bit of decent return. Okay. Thank you.
Well, I want to thank you so much, Mr.
Robert Katawaire.
Robert Katawaire. He's a resource person from the Capital Markets Authority, and of course, he's opened the platforms there for you. Another way to also invest your money away from the conventional, you call it the conventional or the conservative saving of money. But these are also platforms and of course opportunities for you out there, and it is as cheap as just 100,000. That's the minimum. So you could invest just 100,000, you could invest 100 million, you could invest $1 billion shillings, whichever that you can actually afford, and use that other platform to also gain and benefit yourself. Now we'll stop the discussion here to just remind you that COVID is still with us. We just set up our game. We just need to do anything possible. Let's not tempt the government to think of another lockdown. We wouldn't want to go into another lockdown, but we can only avoid a lockdown by living responsibly. You shouldn't wait for somebody to tell you to put on a mask or to sanitize or do what you're supposed to do. Let's do what we think is important, and of course, I say for our lives. We thank you so much for choosing to be with us. Stay well, stay blessed, and stay safe. For God and my country. We'll talk again tomorrow. Good morning.